Hi, thanks for tuning in. This is the US Futures Weekly Chart Analysis for the week ending 23rd of August 2024. First chart is the US Dollar Index Futures. You can see price has pushed lower this week with an increased spread and about average volume down here. Price has perhaps overshot the expected level just a little bit this week. So you may find this market moves into consolidation mode, sort of in this sort of level. You've got some last gasp levels going through here like this. However, I expect the market will probably attempt to recover some lost ground this week and perhaps push a little higher and maybe even bump its head on this level. We'll see. And then maybe consolidate in this little area here during the week. E-mini S&P, this is S&P 500 index futures. You can see the market pulled back recently. To a very logical level. Accelerated higher in response last week. This week spreads narrowed, volumes reduced and was well below average, suggesting the market really wasn't intent on pushing higher this week. There was some uncertainty in the market. The highs of the range really come through here. So you can see the market's pushed up to the highs of the range and really didn't attempt to issue a challenge to those highs. It's pushed up to that level and pretty much moved into consolidation mode. There may be some testing for supply early next week in response, and then depending on how much supply is drawn out, you'll see a response either way. US Treasury 10-year note futures have been really accelerating higher more recently. The last 3 weeks have seen this market in consolidation mode, attempting to absorb the supply drawn out from this strong up bar a month back. You can see the market initially attempted to continue higher, but did draw out some supply, which is exactly what you would expect. And since then, the market has been in consolidation mode. Volume was a little higher than you might consider ideal this week, but the market did close in the top half of the bar, so it's making a pretty decent attempt to absorb that supply. Copper price futures. Copper price futures, we saw the market attempt to hold on there. Eventually it broke down. There was a reluctance to move lower down here, which we noted at the time. And then there's been a positive response since then. The market found some support adjacent to this level, around about the $4. Spread narrowed this week. Volume was reduced and slightly below average. And you may see the market pull back and test this $4 level for strength, especially if the US dollar moves higher in response early next week. Whenever a market finds support like this, there's usually a 50% chance the market will move back to the important level and test it for strength. And those odds will reduce the higher price moves above that level and the longer time goes on. Time and duration is always important. Gold price futures. Gold price futures continue to do a really nice job here. You can see the market spent some time in consolidation mode here. There was a minor attempt to break out. In response, the market pulled back, tested for supply, absorbed any supply that was drawn out, moved higher last week, popped its head above this level, continued to test for supply and absorb for most of this week, and just pushed higher later in the week as supply eased off. You can see that volumes are not excessive down here. That's showing you that selling pressure really isn't emerging in the market as price continues higher. Not serious selling pressure. There's always some in the market, but the buyers are continuing to hold the upper hand above the sellers. Silver price futures. Silver price futures were on the catch up this week. They've been trading more volatile than the gold price market, which is the way it normally is. We saw a reluctance to move lower down here. Price held on. There was some buying support in there. There was a response to the buying support. And this week, prices pushed back above this older breakdown line, which is always a real positive, because breakdown lines are often where markets cannot recover and they break down again from that, and that's where you can go short. But this market's pushed up. It's above that older level. You may find there's some work needing to be done here, especially if gold just goes sideways for a few days. This market will always be dragged around by gold to some degree, but gold's breaking out, and this market's breakout line is right up here. So there's still some work to be done and room for an improvement. So if supply is not strong at this level, you may find the market just continues higher. It'll depend on how much supply is drawn out early next week. And that'll be apparent pretty quick. Light crude price futures had some weakness emerge last week. Here's the lows of the range. Price came back pretty much adjacent to where the market found support previously, down here. In response to this weakness, the market pulled back. It started like a little shakeout sort of bar. Volume reduced to about average after the weakness last week was above average. So selling pressure eased. That allowed the market to close back above the mid-bar level and around about the $75, which is a sort of sweet spot the market's been trading in for some time now. I don't expect any great acceleration higher, but you may find the market trade sort of in this level in the meantime. Any weakness emerges, it may come back to this level, and any real strength emerges, you've got this as your highs of the range. Euro US dollar currency futures. Here was the level we were looking at. The market has attempted to break out initially. These two bars you can really combine into one. This was your absorption bar. This was the recovery in response. And prices accelerated high with an increased spread and about average volume, almost average volume. The fact that spread was increased like that and volume was still a fraction below average just shows you how selling pressure was really low this week, and that allowed the market to stretch higher with relative ease. This was in response to the US dollar really pushing lower. Now I expect the US dollar will recover somewhat, and this market trades the inverse, so you'll almost certainly see some testing for supply in response next week if that's what happens with the US dollar. And that's what I expect will happen. Generally, in response to a strong up bar like this, the market will draw out some supply, and it needs to come back and attempt to absorb that supply. And the higher in the range that occurs, the stronger the market generally is. So if the market can consolidate up here and then move higher, it's really showing you how strong it is. If the market needs to come right back down here to consolidate, it's certainly weaker. It doesn't necessarily mean it's weak, full stop. It's just weaker than if it can consolidate in the top half of the bar. So watch for that. I expect some testing for supply and response next week. British pound currency futures, very similar in some respects to the euro. Here was the highs of the range which we looked at for a long time. Price attempted to break out here, came back. It's tested the breakout line for strength. Here was the breakout line. And now it's responded positively and pushed above that initial breakout. That's a really good sign of strength for the market. For the market to initially break out, come back, look for strength at the breakout line, and then accelerate higher past this level is a real textbook move. Now, similar to the euro, you would expect some testing for supply in response. This will draw out supply, no doubt. So we're looking for the depth and duration of the period of consolidation in response to indicate to us how strong this market really is. And what I said about the euro market applies here exactly the same. Japanese yen currency futures. We saw weakness emerge 3 weeks ago in this market after really pushing higher in response. Weakness emerged here on pretty strong volume, but then last week we noted that spread narrowed considerably and hardly any selling pressure was drawn out in response. Volume was well below the average. That allowed the market to push higher again this week on a small increase in volume, but still below average overall. This market continues to benefit from buyers in the market, wherever they're coming from. And prices pushed above that level this week. You may find this market comes back and tests this important line prior to any more serious attempt to push higher. I expect at this point it's about a 50-50 chance this breakout line will be tested for strength prior to any continued acceleration higher. Aussie dollar currency futures. Aussie dollar currency futures have been doing a pretty good job. This was a pretty nasty pullback down here, but this was a shakeout, no doubt. The market pulled back really sharply and it's responded to close back higher. Next bar was up, and this week prices pushed back above the highs of the old range, and it's up trading level with this sort of weak bar. This was when the market broke out and it really wasn't committed to a breakout. There was no intent behind it, and volume fell away to some extent. The market's pushed back up to it this week. On average volume, increased spread. It looks much more significant this time. I think there'll probably be some testing for supply in response, similar to the euro and the British pound. So looking for some testing for supply in response next week in here, and the depth and duration of that period of consolidation will be important. Bitcoin futures. Bitcoin futures did respond positively this week. It was only a modest response, and most of the week was spent in consolidation mode. Really, it was doing a secondary test for supply in here for most of the week, and just popped out on Friday to the highs of the range on an increase in volume. So all is not lost. It did a good job this week. We were looking for a response after a shakeout and a test for supply. For most of the week, there was a secondary test. There was secondary testing for supply. That's the lows of the range we were looking at here, around about the 60,000 level. I continue to expect this market to make a serious attempt to push higher. If it can't push higher here after all this time, you'd have to question what's actually going on. So this is the highs of the range here, just above 70,000. This is the highs of the mini range here. I would expect to push up to this level this week, possibly up to this level if there's some real strength shown in this market. But you would expect this market to make a response higher, a response to this shakeout and test for supply. After all this time, this market should be ready to go, or ready to at least attempt to go higher. So watch carefully. Just back to the US dollar index futures quickly. Pretty clear what's gone on this week. Here's the range we were looking at here. The market's dipped just below it. I would expect some sort of recovery this week, recovery back here. I don't know whether it'll be successful or not. Possibly it won't be, but there'll be an attempt to recover for sure. Back to the 101, 101 and a half. We'll see what happens there. If there is a real recovery, I expect some resistance will be found in here, just above the 102. That'll be more difficult. The market could push up into here and attempt to recover. The lows of the range, the real last gasp lows, are through there like that. So any break below about 99 would be a serious breakdown. We would have to go back and look at where the next support levels may be below that. But at this point, I would expect the market's overshot this level just a little bit. There'll be an attempt to recover next week. and attempt to recover back to the 101, 101 and a half. And if it's stronger than that, I expect the 102 will show increased resistance. Okay, thanks for your time. Have a good weekend. Back again next week. See ya.